All right, folks, everyone's joining the party these days, right? The rapid pace which this bandwagon is filling up is really crazy. First, let's start with the economy. This morning, Deutsche Bank, they joined J.P. Morgan, Morgan Stanley, Goldman, Barclays, Bank of America, RBC, and BMO in the no recession camp. And then there are, of course, the stock market, which, listen, it's another amazing thing here. The tide has turned, right? And all the converts now have become zealots. I mean, it was one thing like everyone on Wall Street was bearish. Now they're really bullish, and they're bullish on the most expensive stocks out there. Let's not forget a zealot is a person who is fanatical and uncompromising in pursuit of their religious, political, or other ideas, in this case, the stock market. Now, of course, that means we've led now this market. It's so narrow, it's really hard to put into words, but this is really amazing. It's from Sentiment Trader. It's going to sort of underline the case in point here. Just as yesterday, the S&P 500 closed within 0.3 of the 3-year high, but fewer than 40% of the stocks are above their 10-day moving average, fewer than 60% above their 50-day moving average, fewer than 70% above their 200-day moving average. Why is this so important? Because the only time this has happened was in 1928. 1928. Remember 1928? You might remember 1929. This is really important stuff, folks. Unique things are happening with this market, and that's because it's narrowed down, right? It's all about the Magnificent Seven. Well, guess what? Last November, in fact, just a few months ago, investor Stan Druckenberg, he's the billionaire. He actually cut large chunks of his holding in NVIDIA. This is what he's saying right now, though. He actually, by the way, he loves NVIDIA right now. He and some others are in it big time. He says if AI is big, NVIDIA is going to be something where we want to be for at least 2 to 3 years, maybe even longer. NVIDIA is now his largest holding. It's 17% of his portfolio. I got to tell you, I'm in this market. I'm trying to use rules, right, that have worked in the past. And it gets tough. And I understand people out there, the urge to want to chase. You can make money chasing until you can't make money chasing. For many stocks, we are way past fundamentals. Technicals don't even matter anymore. This is all about behavioral, right? Behavioral has no limits until it does. I want to bring in now Bianco Research President Jim Bianco. And Jim, the theme of today's show is converts becoming zealots. And I know that you're one of the few holdouts, so what's holding you back, pal? Get in there. Come on now. Everybody else is in.
Yeah, I know. It should just get in there and blindly buy. But I think that, the zealots are right in one respect, that the soft landing recession story is definitely not playing out. What is playing out is the no landing story, which is the plane is not descending. It is going to keep going. And that means that the economy is going to be good. And they're concluding that's supposed to be good for stocks because it sounds like we're supposed to have earnings and everything else. The only problem is that comes with higher interest rates. And what has been the problem for the stock market for the last couple of years has been high rates. It provides real competition for stocks. If you can get an 8% or so return in the stock market over the next several years, and that's what you should reasonably expect, and you can get a 5.3% return in a money market fund, you're getting most of the stock market right now. So the zealots, what they want is they want to say everything's great, and Jay, you got to cut rates. But the problem is if everything's great and he cuts rates and you overstimulate, you wind up with more inflation, and you could wind up with higher interest rates in the future, not lower.
And, of course, his greatest fear right now, Jay Powell, without a doubt, is being Arthur Burns, too, right? He'll let it go longer. He'll let this thing linger. And even I think he'd rather have a recession than a spike in inflation. But let's talk about that. The Atlanta Fed first quarter stuff is out, GDP estimates. Now, January 26th, they were at 3% GDP. They looked at prices, PCE at 3.6%. That was a week ago. Now we're at 4.2%. Look at this PCE exploding, 4.9. This is to your point. There's no way in the world you can cut rates with this, can you?
No, you can't. Keep in mind that the Atlanta Fed GDP, I've used the analogy, it's like the marathon. It's like where you are at the 7-mile mark, and you still got 18 more miles to run in the race, and we'll see how it goes. But you can't cut rates, or more directly, everybody keeps saying that high interest rates are restrictive. Look at those numbers. What is it restricting? It really isn't restricting a whole lot. And I think Jay Powell's correct to say, look, we can wait. Nothing, the stock market's at all-time highs. The economy's moving along. Where is the restriction? Who's being pinched? Now, somebody is, but economy-wide, you really aren't. And if you aren't being restricted, then, he doesn't have to really rush to cut rates and risk being Arthur Burns.
Jim, you mentioned how this dynamic has been in place for a couple of years with the street wanting the Fed to be accommodative. I kind of think it goes back to Alan Greenspan and how he got the title of the maestro, And so I don't know. I would rather see the stock market up because the economy is great, but I think that connection has been severed for a long time. I do want to ask you something, though, about inflation, though. It's a little political. President Biden, he has now declared war on supermarkets. He says that's how you bring down the price of foods. And of course, I know he's deflecting from his own role in spiking inflation. But right here, folks, this is Kroger. Kroger, the largest pure supermarket out there, their net margins peaked in 2018. They've essentially been coming down. In fact, they're 1.26%, down 11% from the 3-year average. So this is nonsense, but is there anything the White House could do to actually slow the rise in pace of inflation or even bring down some prices?
Well, as far as declaring war on supermarkets, the one place where we have no inflation, zero inflation, is in food. And supermarkets historically have some of the tightest margins. It's some of the most brutally competitive businesses that we have. And to think that, or to suggest that there's price gouging going on at the supermarket level, there's a million supermarkets you could shop at, and there really isn't. What could he do to bring down the price of, or bring down the inflation price? I think it really comes back to restrictive regulations like he's done with LNG and everything else. Allow competition. That's what brings down prices. When you restrict competition, you wind up having more or higher prices.
Yeah. Hey, Jim, great stuff. Always love these conversations. Thank you, my man.
Thank you.
All right, folks, let's bring in South Carolina Congressman